So at any point, if you have any questions throughout the presentation, feel free to type into your GoToMeeting box, and we'll be able to address these questions throughout the presentation as well as at the end. So the agenda for today's presentation, we'll start with the look back, just talk about what we've seen over the past 3 months in terms of weather and also just the market, the market clears that we've seen over the winter. And then after that, we'll go into our spring expectations, looking at first the demand, and then we'll look at the generation and also the transmission analysis for the next 3 months. And we'll end with a summary to tell you briefly what we expect prices to look like for the next few months. So first, looking at the winter in terms of weather, we started off with a pretty mild and quiet winter. So December and January particularly, they were cold, but pretty normal to above normal temperatures were seen for most of those first 2 months. Only when we did get into February is when we started to see the strong below normal temperatures, which led to our peak demand being actually observed in February, on February 20th at 143.8 gigawatts, and this was a new record for PJM, and this is in respect to the winter peak. So definitely, you know, we saw most of our cold temperatures actually in February, and similar trend as well in terms of precipitation. It was pretty dry to start off the winter, and by the time we got into February, that's when we started to see a lot of snow, which also helped to bring up some of the average demand that we saw with really strong lighting load days throughout the month of February. And then to recap the pricing that we saw, we have plotted here the West Hub real-time on-peak averages for the past 3 years. And you know, if there are any inconsistencies that you may notice with some of the averages, because we did include the weekends here, so excluding the weekends, definitely the on-peak averages would be higher than what we're showing on some of these summary tables. So the blue line is clearly last winter when we saw some of the highest pricing that was seen, and this was skewed towards January. And like we've said, our peak this time around, which is the orange line, was actually in February. So all the expensive days you'll notice are shifted from January last year to actually February of this year. And also, you know, looking at the table that we have here, we show you the average gas pricing that we have. We started off December pretty weak, and actually weaker than we've seen the last Decembers over the last 3 years. So we average about $2.63 for M3 gas, and this increased slightly to about $4 in January, and then in February we see a much higher clear, and this is based off of ICE trades. So all these numbers are coming from there. So overall, you know, like we've just said, similar to the demand forecast, February was really where we saw all the strength this winter, giving us some of the most expensive days we've seen this year. I think the highest day I had cleared that we did see was about $279 during that week of February 20th. Again, while it's not as expensive as what we saw in January of last year, this is by far the most expensive February that we've seen in the past 3 years. And then we also wanted to do a quick recap of some of the expectations that we had at the beginning of the winter. So going back to our winter outlook, most of these actually verified correctly, particularly the weather. We did call for a pretty similar trend in demand, and that's what we saw. Again, similar in terms of generation outages, we called for a pretty bullish February, and we've definitely been feeling the effects of Calvert Cliff being offline. So definitely it's been pretty bullish because while Calvert Cliff has been going on outage every February for the past 3 years, the cold just was never concentrated in February. So having both those nuclear generators on outage and having our strongest demand during the same time just really drove up our pricing. And then in terms of generation build, the one plant that seems to have really impacted the system is Warren County, which is the 1,200 megawatt plant located in Northern Virginia. So just as a result of its location and its size, and because it's also a gas combined cycle unit, it significantly helped to reduce costs pretty much for most of the winter, particularly when you look at some of the pricing we saw in December and January. So that that was a very bearish signal to our pricing. Then also, like we anticipated, congestion-wise, December was pretty quiet. Not a lot of constraints. Only when we get to February with the demand and also with units like Carver Cliffs out, that's when we started to see a lot more congestion. So that's it for the winter look back. And now we'll try to recap the spring of 2014, which at this point really seems like a very long time ago, but we'll try to just remember what spring usually looks like. So we have here plotted, well, in a graph, pricing as well as demand and gas for the past 3 years, so from 2012 to 2014 during the months of March to May. And you can see that last year, particularly when you look at March of 2014, we had a pretty strong average peak demand at about 105 on average. That was 105 gigawatts, and this was much stronger than the previous month of March. Similarly, we saw our highest gas prices in March as well at about $5, $6. Again, this is using TETCO M3 ice clears, and the West Hub real-time cleared on average $75 in March of last year. Again, just keep in mind that we're using, we're also including the weekend in those averages, but it will definitely be higher averages if we had left those out. So overall, pretty strong last year, and definitely this year, you know, this is something we're already starting to see that it's we're seeing some pretty strong demand days in March, so this is something that will likely be surpassed from last year. April and May, they were pretty normal. When you compare them to the past 3 years, they look about the same. They look about the same throughout. And then just last year, as we're looking at it, there was a lot of congestion, particularly in April on the Bangalore to Grayson. So that's why you will see some of the strength that is during those months is really just a result of the congestion. So as we start to think about what to expect in 2015, just keep in mind there was a lot of congestion that was a result of outages during that time that might not necessarily be a factor this year. So over to Pat to give us expectations of demand in 2015.
All right, thanks, Diana. Yeah, just jump right into what we're expecting weather-wise for spring 2015. I have a couple of the main drivers that we tend to look at when we're predicting the weather. So the main one this year is going to be that ridge out in the Pacific that really caused all the cold conditions we saw in February. So for this spring, we're expecting that to gradually weaken. So that ends up being March, ends up being our good month, or I guess exciting month in terms of weather. We have some below normal conditions, especially near the Great Lakes and west and parts of Mid-A. And another thing we look at is El Nino. So we're kind of in a marginal El Nino state right now. It's not going to have too much of an effect, but one effect it might have is precipitation, which I'll get to later. And so just to compare this to last spring, it's going to follow a pretty similar progression. So last spring, especially in March, we had the remains of the polar vortex. So it was definitely colder than average in that month, and then things slowly got back to normal. And that's pretty much what we're expecting for this spring, too. So heading into the month-by-month temperature breakdown, like I said before, March is going to be our exciting month. We have some much below normal conditions. out near the Great Lakes and even below normal conditions pretty much everywhere in the footprint. As we head into April, things start to get back to normal. We still have some cold conditions hanging around west, but everything's pretty much starting to pull back. And then once we get to May, everything's pretty much completely normal. We might have some cold conditions starting to drift into mid-A, but nothing like we've seen in February and March. Looking at precipitation, today's actually a good example of that. We're expecting some above normal precip in mid-A and south for March. It's that storm track we've seen in February and heading into today. We're expecting that to continue. As the spring progresses, we're expecting that to pull back. We're still going to see some below normal precipitation in ComEd lasting into April and less so into May. But other than that, we're expecting pretty much normal conditions in April and May. So in terms of wind generation, we're expecting an above normal spring for wind generation. Capacity factor is probably going to be around 48%. Which leads to definitely higher total gen than we've seen the past 3 years. And that, again, is going to be mainly a result of the active March storm pattern that we're going to see. And then as the spring progresses, we're expecting things to drop back to normal with seasonal and stable conditions in April and May.
So shifting over to the generation outlook for the spring, the first thing we wanted to show you is sort of the overall picture of the amount of generation that we're expecting to be offline over the course of the next 3 months. So what both of these graphs show is the amount of planned generation on outage this spring compared to last spring. And as you can see, it's not too different from last year, especially through the beginning of the spring. The most significant difference is that the peak, the time when the most generation will be offline for maintenance, is actually shifted. So we're going to get that peak in the first week of May as opposed to in April. The big reason for this is through the middle of the spring in April, we're going to see less generation offline in the east. And then in that first week of May, and in May in general, more of those big baseload generators in the western regions of PJM are going to be offline. The other thing I would note is that the peak on outage this spring is about 3.2 gigawatts lower than last year. So next, turning to nuclear outages that we're expecting for the spring. This is pretty normal. Every shoulder season, we see a number of nuclear units bring units down primarily for refueling. The one thing that did catch our eye about this spring specifically is that in mid-April, Susquehanna, Limerick, and Hope Creek are all scheduled to bring off units really within 3 days of each other. So that's a pretty big blow to the supply stack in the mid-Atlantic. And what we should see happen is increased west to east flows on some of the northern interfaces like 500X. We also will see fewer flows going south into BGE and driving constraints like Bagley to Grayston, which is one that Diana touched on earlier. So, I mean, with those two impacts together, we should see East Hub prices to be elevated a good bit above West Hub. Other than that, it's pretty much business as usual for the nukes this spring. We also wanted to touch on a couple of new generation builds as well as retirements. So retirement-wise, there is not a lot of significant generation scheduled to be retired this spring. So these first 4 plants that you see, we don't anticipate them having any sort of significant impact. The big one is Big Sandy. And while it's not scheduled to be retired until June 1st, it's a pretty major unit. It's an 800 megawatt unit in Western AEP. When it does come down, it will reduce pressure on constraints like the AEP DOM interface, and may reduce some of the bullish Dominion congestion that we've been seeing. But again, it's not going to be retired until June 1st. So thinking about the spring specifically, we shouldn't see it have an impact. Turning to the new generation builds, two of these are pretty significant. So the West Deptford plant is a 750 megawatt gas plant in PSEG. It's actually already online. It came on at the beginning of 2015, and we expect this plant to do a couple of things. First, it should cut down a little bit on the amount of pressure on the 500X interface. We also think because of its location, we should see less of that of bullish AE congestion. Constraints like that include Monroe to Vineland that send a really bullish signal to AE, and we expect this to cut down on that. So far this year in 2015, we haven't seen many of those constraints on days when we would expect them. So it seems like that is what it's doing for the region. The second major build is the Nelson Energy plant in Western ComEd. It is a 600 megawatt gas unit, and this is likely to increase the impact of some bullish ComEd constraints, such as Nelson Electric Junction and Byron to Cherry Valley. We already get those constraints on days of high wind in MISO North, and this new build we expect to sort of exacerbate those constraints and put more pressure on those lines. So turning to transmission, at the end of the presentation, we included some tables with some of the longer-term line outages that we expect to drive impactful congestion this spring. We don't want to bore everybody by going through every single line one by one, but those slides are there as a reference, and we did want to highlight a few areas in particular. So the first one is Dominion, where we see the potential for a significant amount of bullish DOM congestion pretty much all spring. So we've already seen some of it with a couple of line outages already in effect. The Lexington Dooms line has been out for months now, and we see it driving Valley transformer congestion. And then more recently, they took the Carson to Wake tie line out of service. That went out on Monday, and we're already seeing a fair amount of Person to Halifax and Curdam to Beach DP congestion. That is going to continue with this line expected to be out until the middle of May. At the beginning of April, the Carson to Wake, or sorry, the Clover to Carson 500 kV also goes out of service. So that's just going to exacerbate the impact of these constraints that we're already seeing. The North Anna Nuke is scheduled to go out of service next week. The impact of that, basically all of these constraints that we are talking about, it's just going to put more pressure on them. So Valley Transformer, the CPLE import-driven constraints like Person to Halifax, it's just going to make them worse. And then lastly, right around the end of March, the Mount Storm to Valley line goes out of service. We expect this to do two things. First, it will drive additional flows on the AP South interface. We may see more AP South congestion. it's also going to force reliance on the Cloverdale to Jackson's Ferry line, especially when Bath County is pumping. So we may see more of those constraints like the Cloverdale transformer and Moseley to Roanoke, all of which are bullish to Dominion and bearish to AD Hub. And the last thing I'll note on these outages is they will all be in effect for pretty much all of April. So April in particular is the month that we're looking at to really see a lot of this bullish DOM congestion. The second area we wanted to highlight is ComEd with 2 line outages in particular. We've already seen the Nelson Electric Junction line go out. That outage went active on Tuesday. So something Pat touched on earlier in the presentation is that we're going to see a particularly windy March. And with that line out of service, there are a number of bullish ComEd constraints that we expect to see, like Dixon to McGurr, like Beaver Channel, Albany. And as we see stronger wind, it's going to stress those lines and it should drive a good amount of upside on ComEd prices. So the overall outlook is for a bullish March in ComEd. But then looking at April, the line of significance that will be out of service is Dumont to Wilton Center. That's a pretty bearish outage for ComEd. We tend to see it drive constraints like LaPorte to Michigan City that sends a strong downside signal to ComEd. If that outage overlaps with the DC Cook nuke outage, that's just going to impact those constraints further. We'll also see more of them on days of strong wind. So, I mean, thinking about the spring overall, we see a bullish March for ComEd followed by a bearish April, and then likely a pretty neutral May. We didn't see a lot of major transmission work that would really impact ComEd in May. So the last thing we wanted to touch on is a major transmission upgrade in the PSEG area. So they've been building this Lackawanna to Hopatcong 500 kV line for a number of years now, and it's scheduled to go active on June 1st, but there's a very good chance that either they bring it into service before that date or that it at least starts testing in April and May. So even though it doesn't officially go active until June 1st, we expect it to have an impact this spring. And we expect it to do 2 things primarily. One is it should take pressure off of some of the lines like Juniata, Albertus, and lead to less 500X interface congestion. The other thing it might do is increase the amount of bullish congestion in PSEG. It basically brings additional power over to Hopatcong that can then either flow to Ramapo or into PSEG at Roseland. So we may see additional congestion on Maywood to Saddlebrook and Cedar Sub to Roseland, both of which are bullish to PSEG. So sort of the overarching impact of this new build is that we expect PSEG prices to likely be a good bit more expensive than PPL. So that does it for generation and transmission. I'm going to pass it back to Diana.
So the last part of the presentation is really to talk about the fuel expectations for the spring. So we have here plotted from January 2012 to February 2015, the high, lows, and also the average of the TEDCO M3 clears that we saw on ICE. So in red is the highs and in green is the lows. And the trend that we're really trying to focus on is exhibited in the low clears. So just looking at that green line, you can see that we've been seeing lower lows more recently than what we were seeing in January of 2012, for instance. So taking a screenshot of only the lows over the past 4 years, you can see in the black line is where we're starting off 2015. So definitely lows to start the year are much lower. And what you can take from this graphic is simply that gas is going to be cheaper as we saw at the end of 2014, and this trend should continue as well in 2015, seeing much cheaper gas prices for this May than we've seen over the last few years. So this brings us back to gas pricing that we saw back in 2012, which averaged about $2.30 for most of the spring. And you know, the overall point for this is just to say that our energy costs are going to be much lower, similar to what we're seeing for oil pricing. This is the same that is being seen in the gas markets as well. So really cheap fuel costs. And then to end our presentation, just to go over some major points that was made. We started off with the demand. We do expect that in both temperature as well as precipitation, March will be bullish. More normal conditions expected for April and May. And then for generation outages, really, it does look bearish. We're about 3.2 gigawatts lower at the outage peak for this season than we were last year. And also just because it's shifted from April to May, where we'll see that, you know, that peak outage number, then we can expect that, you know, May is usually the lowest demand levels that we see. So if that coincides with the outages, then less of an impact on our pricing. And then in terms of generation builds, similar to what we've just been seeing with all the new builds in DOM, PSEG, and ComEd, for those that are still to come online, they can only bring more gen online and depress our energy costs even further. And then last, congestion-wise, for West Hub, we'll be looking for Dominion outages and all the work that is planned in Dominion over the spring to really provide most of the bullish impacts to congestion costs for the West Hub. And then finally, just looking at the fuel trends that we've been seeing over the past few months, this should continue, and we should see mostly bearish gas prices for the spring. So that's it for our presentation. If you have any questions, please feel free to type them in right now. Otherwise, we're going to take a few minutes just to have those questions come in, and we'll address them. Okay, so we got one question on the monitoring of the Lackawanna to Hopatcong 500 kV line. So as soon as this line is energized, we should expect that our transmission RT team will be on it to make sure that they have it monitored. So right now we have most of the other lines feeding into Lackawanna from Susquehanna all the way to Roseland. They're already monitored, so it's going to be you know, pretty simple for them to go ahead and monitor that last phase of the project. So we should have this as soon as it is energized. Then we have one more question. All right, so to conclude, just a reminder that you will get a copy of the presentation as a recording as well after this. So we did get a few questions about whether you'll get them. Yes, we'll send this as soon as we're done here. Otherwise, thanks a lot for coming to our presentation. We'll talk to all of you soon. Have a good day.